What are the big four financial numbers that you need to track if you're not tracking anything? What's up, blue collar business owner? Welcome back to the Blue Collar Prosperity Podcast. I'm your host, Paul Maskill, where I focus on helping guide you to have a business that produces consistent positive cash flow. In doing so, you'll have clarity and confidence that your business is headed in the right direction and it is financially healthy. Today is a solo show. It is the first Monday of the month, and we're going to get into the big four. So here's the truth. You're busy, and most business owners aren't tracking anything other than whenever they're making a decision, they check how much money is in my bank account today. But that only tells a tiny fraction of the story. So where do we start? In my opinion, if you're not doing anything, you're not reviewing anything financially on a weekly basis, these are the four numbers that you need to know in your business to determine, are we on the right track? What's trending? How's the financial health of our company? Now, the truth is that most companies in the trades, most home service companies, most businesses in general are not creating consistent positive cash flow. They are not making very much money on the bottom line, even though they're doing millions of dollars on the top line. And as a CFO for companies in the trades, my job is to make sure that you are creating consistent positive cash flow. You know exactly what levers to pull in order to sleep better at night, in order to not be stressing payroll, and in order to not be in the position of we keep doing more revenue, but there's still no money in the bank. And what I know and what I've realized over time is the more we can make decisions based on numbers instead of emotion, ego, and excuses, the better off we will be. The numbers will tell you the story if you let it. For example, if you don't let your excuses get in the way. I hear the excuses all the time of why we're not profitable. Oh, we're just reinvesting in our business. Or once we get to 10 million, then we'll be profitable. Or once we do this thing, then we'll be profitable. But here's the thing, that'll never happen because you're not going to have enough money to get to that next step. And even if you do, you still won't be profitable unless you solve the problems today. So the truth is most business owners aren't tracking anything. If you are tracking all sorts of things, and you got dashboards, and you got KPIs, and you got a scoreboard, then that's awesome. And you might not need this episode, to be honest. So if you're not tracking anything, where do we need to start? And for me, for anything that we're doing, building new habits, the key is to just get started. So that's what we're going to get into today. Before you get into tracking all the other KPIs like call booking rate and closing average and average ticket and all the other things that, yes, are super important. If we're not tracking anything, let's just get started. So we need to start to see the story unfolding. And by tracking these four numbers, we are going to get it. So what are those four numbers? It's going to be super simple. Cash in the bank for the week. So if you're going to do this, say every Friday, how much cash is in the bank today? And then from there, how much revenue did we do this week? And then what was our gross profit for the week? And then what was our net profit for the week? So those are the four things: cash, revenue, gross profit, and net profit. So when we start to do this, you will start to see a story unfold and you're going to start picking up on trends. So let's just get into cash. We're going to start with cash. Cash, it's super simple. How much money is in the bank and where is it trending? Is it going up? Is it going down? Is it staying flat? And when you start to see trends, we can then start making decisions. However, if we're not tracking it and we can't see a trend or a graph, then we don't really know where it's at. Now, I know it sounds super simple, but like I said, the facts are most people aren't even tracking this. So track it on a weekly basis. Like I said, every single Friday. Where is it trending? Instead of just guessing of, yes, this is where we're at, or I think this is where we're at, instead of chasing the bright, shiny objects, let's just start with the basic blocking and tackling. Now, if you do this for the next 30 days, so call it the next 4 weeks, now we've built a new habit that we're going to continue to do. And that's the key that I want you guys to take away from this is start doing this and then don't stop doing it. Once it becomes a habit, then let's track more things. But these are the first four things. So cash, we've already covered that. Revenue, super simple again. How much revenue did we do this week? You can either pull this from your CRM or you can pull this from QuickBooks. Once we're doing that, is it going up? Is it going down? And then what can we start to relate that to? Maybe start making notes of revenue was low this week because so-and-so was on vacation or because the weather was great or the weather was poor, whatever it might be. But we can start to see the trend over time of Now we can start tying the two together. Wow, revenue went up, but cash went down. Why is that? Why did we do so much revenue, but our cash actually went down? Let's look into that and let's figure out why that happened, because if we're doing more revenue, ideally our cash is going up. So that's the second one. Third one is gross profit. Gross profit's a little bit more complicated than just money that came in and money that's in the bank. Gross profit, and I've talked about it on the show a lot, it is so important because this is where most businesses go wrong. Gross profit is a very great indicator of, are you priced properly? Especially once we get to gross profit margin. But what is gross profit? It is revenue minus cost of goods sold. What is cost of goods sold? Cost of goods sold is all the expenses related to delivering the service you are selling. So that's going to be our technicians. That's going to be our installers. It's going to be our apprentices. So all of the labor associated with that, not only their wages, but their payroll tax, their 401k, their health insurance, their paid time off, their workers' comp, all the things that go into directly employing people in the field. So that's part of cost of goods sold is labor. The other part is material or equipment, depending on what you want to call it. If you're in the HVAC space, a lot of people break out material and equipment because equipment is obviously the bigger ticket items that we're selling, and then the material is all of the other material that we're using for the job. So labor and material are the two biggest things, but then we also are going to have in there, we're going to have their equipment rental. So if you ever have to rent equipment to deliver a service, that's part of cost of goods sold. If you have to pull permits, anytime you have to pull a permit, that is part of cost of goods sold. If you have to, like I said, rental, permits, anything that's going into delivering your service, we want that in there. So revenue minus cost of goods sold equals gross profit. And this is where you can start to connect the dots. If your revenue keeps going up, but your gross profit is flat, that tells me we have a problem with cost of goods sold and gross profit, because if your revenue is going up, and again, this isn't percentage wise, this is just on a dollar amount, because we want to keep it simple at first. Eventually, then you can get into the percentages as well, which is your gross profit margin. So a gross profit margin, not to get too complicated, is your gross profit divided by your revenue. So if your revenue was 100,000 and your cost of goods sold was 60,000, that means your gross profit was 40,000, which means your gross profit margin was 40%. So that's where we really want to start getting things dialed in. If our revenue keeps going up and our gross profit from a dollar amount doesn't go up and it stays flat, that means we're doing more work for the same amount of gross profit, which isn't ideal. So that's the third thing we want to track is gross profit. Is it trending in the same direction as revenue? If not, why not? If it is, awesome. Are we on the right track, or do we still need to improve it? And then lastly, net profit. Again, pretty straightforward. What's on the bottom line? What's left over after paying all of our bills? So this is where we can also start to connect the dots. If our net profit is positive, but our cash is going down, that's where a lot of business owners get stuck. They come to me and they say, man, our CPA or bookkeeper says we're profitable, but there is no money in the bank. Well, why is that? Now let's start to dig into why is that happening. Again, just tracking these four things. I know it sounds super simple. It should take you no more than 5 minutes every week to do it. But when we do it, it's going to start to help us start really building the habit and taking ownership of the financial performance of our company. I tell everybody, most people in the trades, they have almost all of their net worth tied up into their business, which means all of the stock they own is in their business. We want that business to be financially healthy. So if we are going to own 100% of the stock in our business, we want to make sure it's profitable. We would never go buy stock in a company that is not making money and that doesn't have cash in the bank. Yet we tie our entire livelihood into this business. So wrapping that up, how do we do it? If you don't know how to do this, you don't want to do it, have your bookkeeper do this. Have them send you a very basic Excel or Google Sheet document every week with, at the top, what is the date? So whatever today is, it's November 21st. It's November 21st. What is the cash in the bank? How much revenue did we do for the week? What was our gross profit for the week? And then what was our net profit for the week? And they just send that to you every single Friday, or it's your office manager. Someone will do this for you. And then next week, the next column is November 28th. And then the next column is whatever that would be in December. And you just keep going along and you start to pick up trends. Once that becomes a habit, then yes, let's add other things. There's plenty of other episodes about that. We'll talk about it again. If you, like I said, listen to all the podcasts, if you watch the YouTube channel, we talk about all that stuff. The key here is to just get started. Build the habit. It is your business. You are a massive shareholder in the business. You need to take ownership of the financials. Stop making excuses. Stop letting emotion and stop letting ego overtake the financial health of your business. This is the start of building a dashboard or a scoreboard. It is hard to know if we are winning or losing if we're not keeping track of the score. Start keeping track of the score. I promise you, the things that get paid attention to, whatever the quote is, the things that get measured get managed. When we start measuring these things on a regular basis and we start picking up trends, we are going to take ownership and we're going to take action. The most successful businesses do the basics better than the rest. That is plain and simple. The most successful businesses, you don't hear them talking about and boasting about on Facebook. They're not telling you all these great things and they're not trying to show off. They just got their head down and they're doing the basic blocking and tackling and getting the numbers and leveraging the numbers to make decisions in their business. Once you track these 4 regularly, then we can start tracking the next things. Like I said, we can track gross profit margin. We can track marketing margin, our overhead percentage, our office payroll percentage, our labor percentage. And then we can start tracking call booking rate and, what's the closing rate in the field? What's the average ticket? We can start to build out this scoreboard, but I see where most people get stuck is they see all those things and like, I'm just not going to do any of it, or I'll do it later. Whenever you say you're going to do it later, that excuse sounds good to you and terrible to everybody else. Why not just get started today? You're not going to be able to run the marathon right away, but you can go run a mile, and then you can do 2 miles, and then you can do 4, and business is no different. So get started today. I tell everybody the best time to plant a tree was 20 years ago. The second best time is now. If you need help with this, we put together these scoreboards and dashboards for our clients and be the financial guide for them. If you need help, go to our website, thebluecollaradvisors.com, book a call with me, download our pricing calculator, whatever you need, we are here to serve you. Again, you get 1% better every day. You will be 37 times better at the end of the year. Go out there, make it happen, and track those 4 big financial numbers today. And before you head out, if you are ready to have a business that produces consistent positive cash flow so that you can have a financially healthy business and achieve your personal goals, let's make it happen. Head on over to thebluecollaradvisors.com/call to book a free financial assessment of your business. I will dive into the financials of your business, take a look at what's going on, find any red flags as well as opportunities that you have in your business. Let's make it happen. Again, thebluecollaradvisors.com/call. Until next time, remember, what got you here won't get you there. If you're ready for different results, it's time to start doing things differently.